Hey, welcome. Don't think I've got this countdown thing figured out yet. Welcome to Oregon Cash Flow Pro. My name is James Barber. Today we're going to be doing IUL illustrations. I'm currently logging in. What we're going to do is look at my in-force policies. So let me see if I can log in here, and then we'll be sharing our screen. Oh, I gotta do my two-factor authentication. Hang on a second. So Tuesdays, this is our IUL illustration day. Be sure to put in the comments section 010. Put in the comments if you want to see anything in particular. If you have any questions about the things that we're looking at, anything to do with IULs, today is the day to ask it. We're going to be doing this every Tuesday, as long as I'm not out of town. We'll be doing this every Tuesday. And got to figure out how I can share this while maintaining the privacy that I need to maintain on my accounts. I didn't get a chance to do this ahead of time, so be sure to drop a comment though if there's anything in particular you're looking for. So this should be our year 4 update in my national life policies. I've got 3 of them, one on myself, one on each of my daughters, and I'm going to recut this after we're done with this live stream, and then I'm going to put a link right up here to my last update, which should be my year 3 update. So people can check out how this did in year 3. Year 4, I don't think we got any credit. The market was really bad, and the only option that we have in my national life index choices is the S&P with a cap, and the S&P did not do good last year. So I don't think we got any credits, but we're going to take a look at that and find out. So let me see how I can share this. I wonder if I can just share part of this. Oh, I kind of have an idea. I might be able to do this. Let's see if this will work. If I cut that off. Sander, how you doing? Thanks. Appreciate the support. Hopefully everything sounds good. I didn't check the sound. So let me know if there's any issues with the sound or with the visuals. Okay, I'm going to have to go studio mode. Let's see what this will end up looking like. If I share that. Okay, I think this is going to work. Okay, let's go out of studio mode. Let's go here. Okay, I'm going to be blocking it a little bit. Let me see if I can make it a little bit better. See if we can get this to show up where we need it to show up. So this is my current policy. This is my policy. Yeah, this is my policy. Okay, National Life has a really good interface when it comes to checking out your values and things like that. So I do have, oh wait, this must not be my policy. I have loans out, but I should have more on my policy in this part. So we'll, let me see. This one is, hang on, let me pull this off of the screen. The challenges of doing this live. This one's one of my daughter's policies. Okay. This is one of my daughter's policies. So this is what we have allocated to the S&P right now. I have it set for systematic allocations, which means the money's going to go in and it will get applied. It'll get split up every month, giving us 12 point-to-points. It's basically a weighted dollar cost average over the course of the year. Thank you, Sander, for that. It's a weighted dollar cost average. Your premium payments over the year, you end up with 12 point-to-points. If that is an option with the carrier that you have, I definitely prefer that option. Because there's ups and downs that go on throughout the year, especially if the S&P is the only index option that you have. It ends up being a good choice that we can do that. So let's look at, so it looks like I did earn a little bit of interest since last year at this time. You can see it right there, but we're going to put up in here, let's go back to the beginning of this policy. I don't remember exactly when it was. So we're just going to go back to like, as long as it'll let me go. I don't even remember. Oh, that looks like it right there. So let's go back to the beginning, and then we'll go through today's date, and then let's see if this gives us a total. So there we go. So there's the interest we've earned in total so far over 4.5 years. Yeah, we're right about 4.5 years into it. Average 5.72%. Not too bad. Considering this last year, basically we got almost nothing. Prior to that, we were just under 9%. We've got accumulated value, 7,653. We've got a little bit of surrender charges that are still in there. So let's take a look at, let's see. So I didn't make that payment. We didn't make a payment this year because my plan is I'm going to 1035 exchange this into an Allianz policy and combine it. But I haven't had the chance to do that yet. I got to wait till after tax season, after I pay my taxes, see if we can do it then. But my plan is to 1035 exchange this because I don't have any access to bonuses or uncapped index options with this product. It's unfortunate, but it happens. You know, National Life does have that available for people now. They didn't make it available for people who had their accounts prior to that. So my surrender charge is very low. So it seems like it's worthwhile for me to change. In addition, the other reason that I'm planning on making that change is because the 7702 changes that happened 2 years ago increased the MEC limits. So for the same type of death benefit, I can put in a lot more money. And anytime we can put in a lot more money above the expenses, that turns into cash value. So I want to be able to take advantage of bonuses, uncapped index options, and the higher MEC limit. So all three of those things is why I'm considering doing it. I'm not unhappy with it other than that. And at one point last year, the cap on my S&P option was around 8.5%, I think, which I'm not too happy with if that's my only choice. I'm not a big fan of having caps. I would rather have an uncapped option, especially if it's a volatility index. So that's my personal preference. Some people are just fine with S&P options. There are other carriers that have higher caps on their S&P options. Allianz right now is at like 11.5% for their S&P cap, or 12.5 or something like that. It's up there fairly high. The highest cap that you'll get with an S&P option is the Transamerica IUL. They're up at like 13.5% for a cap, maybe even a little bit higher now because rates have basically all gone up a little bit. So I would prefer those higher caps because ideally what I would like to shoot for is I want to be somewhere in the 8-9% average. I want the opportunity to be in that 8-9% average. And if I have a cap of 8 or 9%, I will never get that average. So that's one of the things I like to see. Now, if I've had this policy for a long, long time and my average was, 6-7% over 30 years, I'm happy with that too. I got nothing, there's nothing wrong with that over a long, long period. But I think we have better options out there right now. So I'm going to be looking at changing. But let's see where this one is at in total. Let's go to, let me check the detail. Let me see what these other pages do. I got to watch out for what I'm putting on the internet here. But what I want is my values. Why didn't it show me the values on that first page? It used to. I want to have to pull up the documents. Where is the rest of our details? It should tell me right here how much I've paid into it. But it's not. It tells me on my mobile app. I wonder if I should pull up my mobile app. I wonder if I should pull up my mobile app. Let me see if that's an option. Let me take a look at my mobile app. National Life has a good mobile app as well. So if you're just joining us, I'm putting up my current National Life policy. We're going to go over my current National Life policies. This is one of my daughter's policies, but I want to have the information that tells us how much we've paid into it so that we can look at where we're at in relation to everything. Okay, here we go. This works. Why doesn't it show this on here? It should. We've got our surrender value, which I don't have a loan, but apparently I missed 18 cents of my loan payoff when I paid that off. I paid it off in anticipation of doing a 1035 exchange. But this is not giving us the information that I'm looking for. Oh, I know what I'll do. I'll just do a screenshot of this, and I'll send it to my computer, and we'll be able to look at it there. Let me see what else is relevant on this that we might be able to share. I think that'll do it. Okay, so this will be good. Let's send this to my computer, and we'll put this up on the screen. All right, where did it put it? Right there. All right, here we go. So right here, we see total premiums paid, 7,851. Now, we were really close. I think we hit our break even last year, but because I didn't put any new money into the policy and expenses came out, we're now not past our break even. So I think we were right at it the last time, if I recall correctly. But I didn't make my payment this year in anticipation of doing a 1035 exchange. And we still have our expenses that are going to come out. Okay. Oh, why did you do that? Let's get that back up. Let me move this back. I like to be able to see all this. I don't know why it keeps wanting to move everything. Okay. So that's why we're back underneath here. if I had made my payment, it was like $700, I think was the limit of what I could put in this year. I would put in $700, $70 would come out for an expense, for the load fees. Not 70, it's actually less than that. It's $42 would come out for load fees. Other than that, this would be up by another 600. So we would be past our break even still by a few $100s if I had made my payment. Okay, so it's important in the early years that you're making your payments if you're interested in getting past that break even. So remember, the reason that I didn't is because we're going to do that 1035 exchange. Now, if it looks like I'm not going to be able to do that, I'll just add the money in. But what I'm avoiding is that 6% load fee. If I'm going to do the 1035 exchange, if I put that money in right now, I'm just giving away that 6%. I mean, the money will be in, it will transfer over. The amount of money I put in will transfer over to the new policy. But essentially, there's not really a reason for me to do that. Like, I can just put the money into the new policy after I do the transfer. There's a small cost when you do your 1035 exchange. There's a small cost on that. So that 6%, if I get charged, say, I don't know, another 5 or 5 to 8% when we do the 1035 exchange, instead of it being just that $42, it might end up being $80 or $70 as the total cost to get that money in. Whereas if I just put it into the new policy, there's an 8% load fee with Allianz for the first 9 years. So I would rather just have that one load fee that I have to worry about taking out if I know I'm doing a 1035 exchange and it's imminent. I'm definitely not going to see growth if I just put the money in and do the 1035 exchange. I'm going to get zero growth in the meantime, unless it's a year from now, right? And I'm doing the systematic allocation in here, which means I'm just going to get whatever the fixed interest rate is, which is like 2.5% maybe, up until it gets put into an index. So those are all the things that I'm using to base my decision on whether I'm putting it in right now or not. So this is one of the policies. Let's go to the next one. Let's see how those are doing. Okay, we're just going to switch this over. Okay, this is my other daughter's policy. Let's go back to the beginning, see what our average is. So we've got an accumulated value, 8250. I'm going to pull up how much we've put into it right now. Let's go back to my National Life app. Switch to that policy. Here we go. So right about the same. I mean, that's what we would expect. It's right about the same average. We've made about the same amount of money. Total premiums paid, $85.05. So let me screenshot that. We'll send it to the computer so we can get it up here on the board. Make it official. Okay. Here we go. So here we can see total premiums paid, $85.05. Same situation. We were right at break even, maybe just past it at the end of last year, but I didn't make a payment on it. And we still have our expenses that are going to come out. So our accumulated value, $82.50. Now our surrender value is obviously less than that. We still have a little bit of a surrender charge, but it's not very much. That's what we like to see in these products. Remember, with a proper design on an IUL, your surrender charge is going to be very low. Maybe not always that low. These were pretty small policies when I started them, but they will be low. Any questions so far? I'm going to switch over now to my policy. And let me do a screenshot there. Okay, let's send that over. And let's do this. Let's get that over here. Come on. What are you doing? There we go. Okay, we've got that. So this is my policy. I did make my payment this year on it, and we are over our break even. You can see I didn't get any credit here from mine over the last year. Oh, come on. Why are you doing that? Dumb thing. It's a challenge. It's a challenge doing this way. Have it. We'll do it live. Sometimes it's a challenge, huh? All right, let's go. So I started mine right about the same time, but I have different point to points. Let's put in, let's say go. There we go. So my average overall is a little bit higher because I have different values in for different point to points, basically on mine. So slightly better return. Accumulated value, 30,000. Here is total premiums paid, 30,355. So we're 3.5 years into it. We're past our break even. And we should see some credits coming up, I would think. Although, we should see some credits coming up. Let me see if we can take a look at my point to points. I don't know if I can. Don't know if we can look at that. Let me see here. Yeah, that doesn't show it. Let's take a look at. Let's look at the bottom down here. You can see I've got this system allocation. So I've got money because I put money in at the beginning of the year. It's slowly getting deployed each month in this systematic allocation. Okay. The basic strategy, that's where essentially your expenses hang out until they go away. The insurance company takes out your expenses each month. So this is how National Life deals with it. Not every company does it this way. Some companies, they'll just put it all into your index option. So this is what's available in our point to point. So we expect growth based on these. Let's see. I have 100% allocation to the S&P. That's our total interest earned so far. So over the course, which matches up here. We've got our death benefit. Again, this was a low death benefit. This was one of my first policies that I started. So the amount that I could contribute to it, not a whole lot, but I have managed to get in 30 grand over the course of 3.5 years. Now I'm not planning on doing a 1035 exchange with this one, mostly because I just kind of want to see how this one continues to perform. It's not a very big death benefit, and it's not a very big policy. And because I still sell National Life, and some of my clients like to get these policies because they have good living benefit riders, I'm just going to keep it around so that we can see how it looks. But I do want to switch my kids. I'm doing the 1035 exchange into the Allianz product. Uh, so another thing to add as far as that goes. With the Allianz, I have two policies on my daughters, one with National Life and one with Allianz, and they were both pre 7702. So my plan when I do the 1035 exchange, I'm going to exchange both of those and combine them into one. So that is another reason why I was planning on doing that, because basically neither of them are taking advantage of the higher MEC limits. So it's a big advantage once those 7702 changes came about that you could put a lot more money into these policies. And essentially, Allianz will allow up to $1 million on kids for their policies. And I don't have any other kids' policies. So, like, Allianz is a little bit strange. There are other IUL carriers that also institute that, but they basically just, in general, don't like to do more than $1 million on a kid's policy, $1 million in death benefit. Other carriers, like Guardian, will not really have any problem. They'll let us do half of whatever the parent's death benefit is. So if I've had a parent that has $6 million in death benefit, we're trying to get $3 million on a kid, Allianz wouldn't allow it because they don't like to go more than $1 million. Now, I argued with them. I talked with the underwriters, and basically I was able to get them to bump it up to 2.4 million in that particular case, but they don't like to do that. I was able to get that exception, but in general, they don't like to do that. So what I'm planning to do is just go up to the $1 million with Allianz, and then I'll be able to expand with other carriers, probably with Guardian, maybe Penn Mutual, add something in the whole life space for my girls above and beyond that $1 million. So that's my personal plan with these policies, and expanding their policies in the future. Don't know when I'm going to be able to do that. It all depends on, funding, how things are going, how things are looking, because we're funding quite a bit into these policies, as you can see. So, yeah, I think that catches us up. You can see I have a loan balance on mine. I didn't pay it off because I'm not planning on doing the 1035 exchange. And currently, it's a pretty low interest rate. I think I'm paying 4.5% still on this one. Now, that's going to change when I hit my next policy anniversary date. It'll go up to whatever the current rates are. But I think it caps out at 6% max. So at worst, it'll be a 6% rate. Not too bad. I have basically policies from my insurance companies that are 5 and 6%. I'm good with that. Now, I could always just opt for the wash loan option if I think the S&P isn't gonna do good. But for the most part, I try not to time the market in these things. I'm just gonna sit in it, hang out. As long as we get an average that's higher than my cost to borrow, which we're still there. My average is 6% in this over the last 3.5 years, and my cost to borrow has been anywhere from 4.5 down to 3.5, I think 3.5% as far as what I've been borrowing from this policy. So it's been good from an arbitrage standpoint. I expect it'll continue. If the caps stay low and our average continues to drop, we'll reassess. But I do think that when the market recovers, we're going to be able to take advantage of that. It'll help keep our average up. I'm not afraid of any particular 0 year. We're going to have those. The S&P tends to have one every 4 years, right? A 0 or a negative. So that's to be expected. And I still think our average should be decent as long as we can keep the caps at a decent level. So I think that covers that. You guys got any questions? Anything you want to see? So this is our policy review. Anything you guys want to see for today? I know. Let's take a quick look at the illustration that I'm planning to 1035 into with Allianz. Let me see if I can pull that up. Okay, I think this is the one. Let's see. Rates are a little different now since I last did this one. Since I last saved this illustration. But this will give us a good idea on policy design. Let's make this a little bit bigger. Okay, so $1 million death benefit, since that's where they max out at, that's what I'm going to try and put in there. We're doing a 1035 exchange in year one. So this is if I max fund it. I don't know if I'll be able to max fund it, but that would be my goal. And I expect I probably will be able to. But with the 1035 exchange of the two policies, and then on top of what it will let me put in year one, we should be able to get a total of 54,000 in here in that first year. Year two, 39.8, and our long-term MEC limit is 26,862. So that is every year for the rest of the life of the policy, what I should be able to put into it, if I can. Now, I look at these things as potential retirement type vehicles. So this is savings for retirement. Obviously, we can put in quite a bit more than we can into like a Roth. And this will grow tax deferred. We're going to be able to access it tax free. So that's the reason for doing this. Now, if I can't put in the maximum here, it doesn't matter. The MEC space carries over and adds up year after year after year. That's why I have a video. And when I cut this, I'm going to put that link right up here. I have a video about IUL as a generational wealth tool. We know that I have a whole lot of death benefit on myself and my wife. And eventually that's going to pay out to my kids. So if, let's say I end up funding this policy at the same amount I'm funding the other ones, which is basically about $6,000 a year. So if I fund this as $6,000 a year, we're going to have $20,000 in MEC space that carries over and adds up. If I live for the next 35 years, okay, we go 35 years into this, there's going to be 35 times 20. So we're going to have $700,000 of MEC space available in here that they can take the tax-free death benefit from my policy that pays out to them when I pass away. They can take that and just dump it right into here. It's going to be in a nice, safe, tax-deferred growth environment that they're going to be able to access tax-free. They're going to be 51 at the time. It's not going to be this much, obviously, because it won't have all those years of compounding ahead of it, right? But it gives them the ability to dump that in and have it grow tax deferred, and then it's going to pass on to their beneficiary tax-free, whatever they don't end up using. The alternative is maybe I am able to max this out, and we end up getting compounding growth of all this money this whole time. But I use it. I'm planning on using these cash values. If I'm plugging the funds into here, I'm going to use it. And so that's going to create a loan. That'll create a debt in here. Well, when they get their death benefit from me, that tax-free death benefit when I die, they can take that money and just put it in here as a loan payoff. So potentially 35 years down the road, this is assuming a 6% growth. So there could be $4 million in here. And let's say I used $1 million in cash value before I passed away. They could pay that $1 million loan off. And now all of that money is in here growing, and they can re-access it anytime that they want, tax-free through policy loans. And if they choose not to, or they pass away, all that death benefit passes on tax-free to their beneficiaries. So it's a great, great way to get some generational wealth. Check out that video on it. My expectation is that they'll have kids also. They could even start their kids' policies. If they hadn't already, I would expect they would have. If they're 50 years old, they should have already started their kids' policies, and their kids' policies are creating MEC space as well. So these are just a great tool because of the flexibility in premium payments. If we don't max out, that space carries over as long as we don't make a change in the policy. If we change the death benefit, if we have a material change in the policy, the MEC limits are going to get recalculated. So we don't want to make a material change in the policy, prior to that dump in. So only once you've decided you're done, you're not going to fund it, then you'll look to maybe reduce it, change those MEC limits, possibly make them go away, right? If you're not planning on contributing anymore at that point. But prior to that, we're just going to let that MEC space carry over and add up year after year after year. Now, in this scenario, did I do a projected income stream? I did. So this is a projected income stream for them at retirement if we fund it at $26,000 a year. Now, the potential is $1 million a year every year in retirement. Now, we know from our videos that that is probably not a realistic expectation because this is assuming a little bit of arbitrage every single year in the policy. That's not likely to happen. We could get that early on in the life of the policy. Okay. We could get it early on in the life of the policy, but later on, as the policy gets older and the loan values start to accumulate, we don't want to necessarily take on that much risk. We're probably going to switch to a wash loan instead of a participating index loan, or at least start to shift some of our loans to that. Allianz is one of the few carriers that will allow you to hold both loan types at the same time. You can have a participating index loan on some of your borrowed funds and a fixed wash rate loan on other parts of your borrowed funds. You can even choose different index options than what the rest of your account is set for index options if you want to. So there's a lot of options with regards to loans that Allianz offers, so that you can basically manage it to the best of your ability when you get into retirement. Now, obviously, your agent is available to help out with that. I'll be available to help out with that, or somebody from my team if I'm not around anymore. At this point, I would be over 100 years old if they're trying to manage their policy here. I'm not going to be available to help out. Maybe my videos will survive me, though. Hopefully, YouTube will be around, and my girls and their kids, whoever's helping them with their funds, will be able to understand how these things work and understand how to manage it. That's going to be my goal before something happens to me, that we pass on that information, that knowledge, so that they know how to manage these things in the future. So that's what it looks like. That's why we're looking at switching over to this policy and doing the 1035 exchange from my National Life. So hopefully, if I'm able to do that, if I'm able to make that all work and happen this year, by next year, we're not going to have a year 4 update, at least on my 2 daughters' policies in National Life, but we will still have mine. That's the plan. If something happens, though, I definitely reserve the right to do a 1035 exchange out of my other one if I decide that that's best. So, yeah. Any questions? Any questions? I think we covered it all pretty good. I appreciate you guys joining me today. We'll be back again on Thursday for whole life illustrations. We're here to do live illustrations. So if you guys have anything in particular you're interested in, Thursdays we're going to do whole life. Tuesdays we're doing IULs. And next week, I don't have any policy updates on the IUL side, I don't think. So we will be doing some illustrations. If you guys have any particular interest in specific carrier illustrations, put it in the comments section, and we'll put it on our list. We also reserve this time for doing policy reviews. So if you have anything you want to take a look at, and you're not interested in signing up for a one-on-one consultation to have me just take a peek at it and do a review, we can always do it. If you want to send it to me and say, hey, go ahead and do this live, we'll do it live. I'll pull it up. I basically do it the first time. I try and pull it up the first time live so that we can take a look at it and do the policy review. And you guys can see and hear exactly what I think in real time as I do it. So I think there's some value in doing it that way. One, it shows you that I know what I'm talking about and I know what I'm looking at, because you get to see me the first time I'm looking at this stuff and my initial reaction. And I like to think I do a pretty good job of analyzing this stuff on the fly. Okay. That's stuff that comes from experience. Um, there's not really anything wrong with people that can't do it that quickly, or they need to take their time and do some research. There's nothing wrong with that. But I do think that it's one way that I can kind of set myself apart from other agents in that, we have a certain level of experience. We like to dive into details on this. I know a lot of my clients appreciate that detail, and the knowledge that we bring. So um, that's my preference. My preference is to do this stuff live if we can. But if you want a one-on-one consultation, you need a policy review, maybe you have an illustration you want me to take a look at and let you know how it looks, we do offer one-on-one consultations. There's always a free option available. There's a 20-minute free consult at my Calendly link, which you can see that scrolling around here at the bottom. You can see that link there. Also in the description of these videos, you should be able to just click on that link. Oh, maybe I don't have it on the bottom of this one. My Calendly link, I'll put it in the live comments here. I think I had it on my live one. I've got to fix that little scroll bar. So there's our Calendly link, and I'll just put it in the video. Let me get off of this screen share. I'll just put that Calendly link in the video right here in post-production so that you can see that. But anybody that wants to meet with me one-on-one, sign up for a Calendly link. I have free options. I have paid options depending on, what your needs are. But we could basically talk about anything. Obviously, I specialize in certain areas. I know a lot about a wide variety of things in the financial space. So I can have ideas that can help you out, even if it's not something that my expertise falls in, where we can do a deep dive on. But I'll let you know about that, and we'll be able to at least point you in the right direction if it's not something I have a deep knowledge on. But I have a very broad knowledge on a lot of stuff. So I appreciate meeting with all of you fine folks. And yeah, it's I would say it's the best part of my day. I do enjoy those meetings, whether it leads to a life insurance sale or not. It doesn't really matter to me. I just enjoy meeting with people, help you guys solve your problems, and meet those financial goals that you're doing. So I look forward to seeing you guys again soon. We'll be back on Thursday. Have a good day. We'll see you guys next time.